Pulling Matt up. Okay. In a minute. Hey Matt.
Hot dog.
It's all right, man. That's
Had to
that
do
works.
the
Okay.
had to do the old internet cure, which is restarted, makes it reboot it. So I don't know what the deal was. I
Yeah, no
apologize.
doubt. No worries. No worries. Glad you're here. So everybody, welcome to Lunch with Lumbermen. Matt Lehman, Lehman's Lumber Guide, Ashley Buckle, mxlbr.com. Matt, bunch of stuff I would like to talk about today. First of all, are you at home today? You're at home today, right?
No, I'm up in the mountains of North Carolina for another 2 weeks.
Sweet.
Um,
That sounds
it
excellent,
is.
man.
I don't know.
Are you staying
I
there?
told my wife I told my wife I've way overspent my vacation budget this year, so we're not going anywhere next year. So
Gotcha. Gotcha. Well, let's jump into this. This worked out because a lot of people are streaming in now. Wanted to talk a little bit about where we've come to, where we're going to. A lot of unknowns out there. I kind of pulled up and read. First of all, your LLG updates coming soon. Do you want to go over that a little bit so your users and people know what's coming out different?
we're just changing the delivery dates of the briefing and the forecast. My briefing is the one that where the scouting report and the briefing have the prices, the expanded prices, and I get more of that information over the weekend than I do through the week. So we're going to switch and do the briefing and the scattering report on Monday, and then the forecast on Thursday. So we're just swapping the days. So just it's really the content's not going to be any different, but just the delivery days are going to be different.
Sounds good. And I just had Nick bring up the 12-month forecast. I want to talk a little bit. I don't think it's any surprise. I shouldn't say it is now after we've seen what the Fed has been doing. Their uh, their so-called bend going forward. And I looked at your market analysis, why and where 2023 housing will be stronger. So readers, if you read this on this column over here, good article. And Matt, maybe you could just briefly go over what you show as going into January chaos? Because I may have to take the other side of that with you. I think prices are pretty well beat up and will continue to be on this one. I know January is usually a time when people buy, but I'm wondering how. I'm a little bit beginning to feel like a little bit 2008-ish, Matt.
And I think, Ash, everybody is, and that's my, I guess that's my contrarian nature is there's only one thing that's going to make this market higher. It's not going to be a shift in demand immediately. We still got 3/4 point interest rate hike yesterday, and I'm a firm believer that that we had in our inner circle meeting the other day. I'm going to back up and say something. The guy said, if you had $1 million to spend, would you invest it in lumber at the end of November? And I said, absolutely. And he said, why? Another guy said, why? And I picture right here. I said, that picture right there, the FTP. And just without knowing anything about the market, the FTP is historically correct 86% of the time, plus or minus 1 week. And that uptrend is just too strong to deny that some possible disruption is going to happen that's going to cause supply and demand imbalance, and prices are going to rise. Everybody on the buy side right now has been short all year long, basically over. And we tried to rally the last couple of weeks, and it's just kind of going nowhere. But prices are not just collapsing again. But the expectation is, because of the lean inventories, that the prices are going to fall hard again. And the one thing that keeps coming back to my mind, and about, what was it, a month ago, that said that they were going to curtail in their North American production. And usually we see curtailments in British Columbia. We don't see them anywhere else. You have downtime for maintenance, and the Southern Pine takes some downtime for holiday-related incidences or occurrences. We have never been in a market before where the entire lumber complex was dominated by 3 companies, and those 3 companies are all Canadian-owned companies. And in the U.S. and the South particularly, we've never been exposed to the methodology of marketing and curtailing production. And I think between 3 companies, Canfor and West Fraser, they completely dominate the entire lumber industry, and they have the ability to shift the market and make something significant happen. And I bet is that there's going to be a demand continuity that's going to cause everybody to keep lean inventories, and there's going to be a supply disruption that's going to catch the market by surprise, and it's going to be too late when we get the news. And I keep looking at everybody's curtailment, and nobody's saying anything, but they're in the South are just quietly doing a little bit less, eliminating shifts, running a little bit shorter days without making announcements. But supply and demand seems to be, at this point, if you just look at what's happening with prices, they're pretty much in an equilibrium. You got, pine's a little bit firmer. West Coast seems to be sloppy. In Canada, it's from one day to the next. It's a good day, it's a bad day. It's they're not selling production, and they don't have anything for quick shipment. To me, it's just too much ambiguity and too much confusion is causing the market to be overly leaned at a time when it just makes it susceptible to the upside. And I'm looking for a surprise announcement that's going to cause demand to or supply to be reduced.
So why would somebody take wood off the market if they're making money making it? Was my question. Why would somebody take wood off the ground in the South if their production cost is still so far above where they're actually producing it at? And it just doesn't even seem like that's good business.
Because you can manipulate the market and push prices back to $1,000.
Yeah, I think the market's bigger than that, but that's a good. I mean, I understand your thought process there. Look at one of the things that keeps coming up. Every buyer that I'm at, they keep telling me the same thing. And these are people that have bought forever, right? I can't buy until my Six Sigma karate black belt expert that's got 5 master's degrees sitting in his office tells me that I can buy, even though I used to buy 100 cars a month. And now I have to wait for them to let me release a PO for 2 trucks. It's crazy. I mean, I'm hearing a lot of
Yeah.
that.
So those are guys making decisions about lumber inventories that don't have any business making decisions about lumber inventories.
Well, yeah, but in their mind, they're running it like they're standing teaching a class, right? And you and I know that that's not how. We're back to the old. Do you remember that movie with Old School with Rodney Dangerfield, where the teacher tries to
Yeah.
teach him something about economics, and he gets up and tells him how the real world works? I figure that my friends buying lumber
Yeah.
now are caught in a similar situation.
Well, they are. If you ask,
but it's
if you those same buyers in a normal market wouldn't be sitting here letting their inventories run to nothing, knowing that you're in a seasonal time of the year when the market makes its best move up. It's the from November through March is the most historically the most uptrending time of the year for the market to go up, and to bet against that, regardless of what the Six Sigma Karate Ninja Turtles are got going on, the reasons why they yeah they the lumber market still has repeating cycles of there's a preparatory cycle that happens in the winter in getting ready for the demand cycle, and the longer that doesn't happen, the sharper it's going to be. It's going to come up, and the reason mills are
Matt,
going to, I think mills are. Go ahead.
Yeah, no doubt. I mean, the big seasonal I've always seen since I've been in the business. Fourth quarter kind of lows in October, November. First quarter, you kind of make highs, right? I mean, it's you got lower cost, lower production or bigger production in the fourth quarter, less production in the first quarter, while people are building a spring inventory. I guess the question now is what's the difference between dealing with a 3% interest rate market versus a 7 to 10% interest rate market, right? But yet the trend should still be intact. It just depends. I guess there's a lot of unknowns out there. I'm trying to wrap my head around still, if that makes sense.
Yeah, and here's where I think you're getting caught in a trap. You're trying to think logically about what makes sense and what the market should do based on fundamentals, and it doesn't do that. It does. The market reacts to the emotional, irresponsible, or irregulars of the buyers, and I think we're just set up to have this low of inventory for this long a time. It makes logical sense to do that. It's just setting us up for an underbought condition that the housing doesn't have to improve for us to be underbought. I mean, we're still going to build. Builders are still going to build some homes, and we still haven't, other than interest rates, we haven't had a housing affordability crisis until interest rates got to be 6-7%. Because when we were 2.5-3%, and homes when we were building homes, and they were $30-40 a square foot to build versus for a framing package versus $11 where it is right now. We're still selling a bunch of houses, and the housing market's being forced to the sidelines. And we can see that multifamily's picking up the slack because the interest rates have gotten high, and they're making purchasing homes unaffordable. And like the article that I wrote there, the way that we're going to figure out a way to make more affordable housing, and it looks to me like the easy solution is less expensive land, less expensive building materials, and that's going to be moving further out into the suburbs. We've seen that the exodus from the metropolitan areas through the pandemic has made people more willing to live in the suburbs and willing to go further from metropolitan areas than they ever have before. And if you just ride around, I don't know how it is in the Chicago market, but you ride around in the South, you're just going through the country, and all of a sudden there's this big scalp spot of land that's like 10 or 20 acres, they're going to put up, says coming soon, from the 400s, and these things are an hour from a city, and they're throwing out where Billy Bob's mini mart was, and creating a city out there in the middle of nowhere, and it's just more affordable, building schools and restaurants, and you can create the same franchises that are all over the world can pop up in any south in the country road. And I just think that's the future for where housing is going.
So we had one question from YouTube, Matt, from Patriot Father of 9 says, when will the new prices trickle down to the consumer? Well, it's an interesting question that you asked the other day, because I kind of look at the big box centers prices at their stores by zip code when I look at our numbers on the platform. And I've noticed, I guess my question is, most of those items kind of move with print, right? And so when you hear Matt and I talk about somebody buying product at a big discount, where if you're buying from a home center, you're probably not going to see that. I think the overall trend has been the prices moving down. I think certainly nobody's paying the same prices that they paid 6 months ago for lumber or 4 months ago. It's moved down substantially. On many of the panel items, it just literally started moving down in the last 2 or 3 weeks. So I think on the panels, OSB and so forth, the wholesale market and the mill market on OSB, those people are seeing the deals right now. At the retail level, it's not trickling through to you yet because the numbers haven't been realized at those levels yet. Does that make sense, Matt?
Yeah, and here's another. I just had this thought too as well. There's no big competition for product. I mean, if you are a Lowe's patron, or a Home Depot patron, or a Menards patron, or whoever you buy from, or your local lumber yard, people don't go to the price of lumber. I'm not buying that project right now.
Yeah,
they go, lumber's not an issue. If they want to do the project, then they're going to do the project, and they're not going to go shop around for trying to save $200 on a deck. They're just going to, the prices are good enough. They're going to do it. It's just that the volume of wanting to do those projects isn't there because everybody's just scared to death that, when the Fed says, I'm going to choke out, and you start feeling like you can't get your breath, you're getting choked out, and that's what's happening.
Yeah, I'm going to bring up Shane's question here. We touched on this a little bit yesterday. Would the potential of a rail strike in the U.S. after November 20th cause the market to sway upward despite the short-term nature when and if they want that to occur? Maybe. Yeah, I mean, you mean right now, Shane?
Yeah, I think that.
Yeah, I mean the rail markets are tight right now, right? And we've talked about this with some friends of mine that work at mills. Rail hasn't really improved that much. I mean, so like Matt said, if there is a January chaos and everybody tries to hit the exits at the same time, cars are still going to be shipping as slow as they're currently shipping. So if you're happy with your rail right now, if people try to get 5 times as much, 2 times as much, it would just be that much slower. Now, the plus to that is the trucking is made up, at least from the southern U.S. mills, and any reloads that can ship wood that already have it on the ground. Trucking, every day I check on it, even though the diesel prices are going up and there's a fear of running out of diesel fuel, I've seen lower and lower freight prices on most hauls on flatbed trucks in the last month and a half. So, Matt, I kind of bloviated on that. What's your thought on it?
Well, I think you got to factor in the initial overreaction, irrational behavior of the buyer, and the reality of it is, if there's a rail strike in the U.S., then Canada's not going to be able to ship wood to the U.S. because the cars are going to get stuck. You forget about. I mean, you include the disruption in the U.S., which may affect more Western U.S. lumber moving into the Midwest area that moves by car, but 80% of the lumber in the South moves by truck. 100% of the lumber that ports moves by truck. So that's going to still flow, but the initial reaction is going to be, holy crap, we can't get whatever it's going to be. It's going to be a panic. And it's only going to happen because you got to consider where inventories are, the real level of inventories are, such that any future question of supply disruption is going to cause people to get off the fence. And I mean, everybody's got money to spend. Everybody's got inventory cap they can blow until the Bean Ninja Turtles say don't do it for whatever reason, based on the economy, the future projections. But I think the market is overreacting to, well, not overreacting, but it's reacting to what the economic situation forecast is going to be for the next quarter, and there's no incentive to build inventories. And your question earlier, why would a mill curtail production if they are making money? Pulp's a factor for one thing. The pulp market's getting kind of short on chips, and there's a, however you factor that in there, that's kind of a factor. But still, I think the biggest reason you do it is because you can do it, and it'll be enough to jerk them.
One other thing, Matt, too. This is I wanted to bring up your framing package index when when we were asked about if this is catching up. I mean, if you just look at Matt's graph, the builder's cost, I mean, you can see how substantially we've moved down on just the framing package part of the house. And just for people that haven't seen
18 months.
For people that haven't seen this before, I'm going to have Nick pull up the geographic region on here that shows the different areas Matt's talking about. This encompasses like the framing package and all the sticks and panels it takes to build a house. And Matt's put a really concise number on an average square foot house and what it costs in these different regions. So as we go back up to that chart, you can see how the trend has moved lower over the time frame. Now, I'm also going to push your weekly pricing that you've been going out with your people, because one of the things we're going to see going forward, Matt and I have talked about this, is less contracts. People are sitting there right now. They're buying less inventory right now. A lot of people I talk to say, I put that against my contract, right? When people have less contracts, they have to buy more spot wood. So mills are also dealing with, and sellers with, having to sell more wood on the open market, where before, in some cases, they were picking up the phone and just moving contracts around. And that basically was priced off of, there's not much price discovery there. That comes off of an index and a plus and a freight, right? Now, let's say the market goes to a very high percentage of spot market transactions. People need to get their trading hats on again and start asking for orders and negotiating, right? And that gets to be somewhere we haven't been over the last year or two. That should add a little bit of fun to the whole process, Matt.
Yeah, and I think if you think about how a mill sales office is staffed, they have to be able to for salespeople to be able to answer telephone calls and emails and sell based on a certain amount of production being on contract. So if it's 80%, if it's 60%, if it's 60%, then you have a sales staff that's only got to sell 40% of production. But if contracts reduce to 40%, then they've got that same staff that's got to sell 60% production. It's going to get chaotic. It's going to be hard to get through, get people to get on the phone, and you're not going to ramp up your sales staff. It's just these guys going to get overwhelmed. Men and women that are used to taking 30 phone calls a day going to be taking 30 phone calls an hour, and I just think it's the setup for a panic is national overreaction is peak. It's ideal. It's like the perfect storm, and again, it doesn't have to have anything to do with housing starts, or it's just if there's one of the things I refer to as inventory shift, and who's got the wood. And right now, are still in possession of most of the product. There's been a little bit of inventory build on the side of the consumers just to fill in, but it's not an aggressive inventory accumulation to prepare for the spring. It's not a preparatory cycle. It's just to fill in, and the mills are getting rid of that, shipping it to reloads and distribution centers and VMIs and the woods. It's getting scattered all over the place, and so the mills are going to be in a good position to be able to curtail without having a lot of wood on the ground. Because if you look around, there's still not, you just if you're a buyer and you go out and just make up a big inquiry of 20 or 30 trucks or something and see how difficult it is. There's still not a lot of willingness for the mills to sell a lot of volume at particularly these prices. I mean, they may be profitable, but they're not slam dunk killer numbers.
Yeah, and let's remember the home centers still have pretty good outtake from what I'm hearing right now, right? I mean, there was a big bid on multiple cars on our platform yesterday on some studs, and I went back to the mill and they got pinged digitally on our platform for the bid, but their deal is they're still trying to stay in front of making sure the home centers are being fed, and they didn't feel they had to come down and take those numbers on that inventory yet, and so
Yeah,
that's still out there.
Those home centers also have VMI programs.
Absolutely.
The home centers also have VMI programs.
Yeah.
Plenty of wood coming at them.
No doubt. So that inventory shift you were talking about, Matt, I want to kind of show people what Matt puts on his platform. So why this is important is you can almost see where prices are by where wood is in the pipeline right now. And right now, wood is shifted still closer to the mill level, I'd say. But the interesting thing from talking to some mills, Matt, is they're moving their dressed inventory every day, which means that it's finding its way to end user, a wholesale distributor, or a job site, right? And it may not be at numbers that are reflected in a print number, but this is the kind of market where real deals are made, right?
Yeah, and that visual there, the inventory shift, that green era has come from 5 up to 3, so it doesn't really reflect where it's been. It just shows where it is, but where inventory is moving more to the consumer and away from the mill on a small level. And typically it swings like a pendulum, and it's going to go from this underbought to overbought condition. And I think we've already of the market being at its extremely underbought condition, and I think it's recovering from that, and we're getting more buyers are more willing to just to not be as lean and cover a little bit more. But it's getting tougher to find wood. I mean, it may not be getting tougher to find your 2-week shipment that you're looking for, but prices are certainly not. You can't buy $100 under print on anything anymore. Yeah, their mills are kind of digging in because they see that there's no volume to sell at a cheaper number, so they're kind of hanging flat.
Yep, no doubt, Matt. Is there anything else you'd like to go over today? I'm kind of running out of ideas here.
My prevailing thought is that the market is it's kind of in a spot of being underprepared or being cautious for worse news, and we keep getting more negative housing numbers and more bad interest rate numbers. Still, the one thing that's not going the wrong way is employment issue. I hear about layoffs all the time, but it's like in the mortgage industry and the real estate industry, but it's not all over the place. So I think there's some mixed signals that the economy wants to recover, and it probably will as soon as if you think about interest rates, for example, we talked about, I missed all of your show yesterday about interest rates going to 10%, but mortgage rates going to 10%, but we're already at a place where if mortgage rates drop 2 points from where they are, I feel like a home run and housing is going to take off. You go from 8 back to 6. We talked about this before, that 6 only sounds bad coming from 2. It doesn't sound so bad coming from 12.
Yeah.
4 or 5 isn't going to sound so bad coming from 8.
Are you going down to NOLA next week, Matt?
No, I have the privilege of going to be to testify for a court case in an arbitration over somebody that got screwed on a lumber that the developers refusing to pay price increase, and so I get to go be a star witness.
Are you one of the are you an expert witness?
By my own confession, I am, and according to the guy that recommended me, I'm an expert witness. I tell you, the deposition was not fun. I feel like I just was like Perry Mason was beating me to pieces, but I've got nuts. So I won't be going on.
David Stelkop was saying, "Great show. I'll see you guys in Phoenix." I'm not going either because I'm basically taking those funds and going and visiting some mills and some other customers directly instead of sitting around with my friends drinking a bunch of beers at the bar. I think I'm going to take
You can
those.
do that anytime.
Yeah. So I'll miss everybody down in Phoenix. I like all the NOLA people. I just am not going to be able to make it this year. But Matt, I appreciate it.
One more thing to ask you: how's the transaction level on the platform going?
Yeah, so hit our budget in October, and we already hit half of our budget in November. So which is crazy because literally a bunch of it came from about 3 multifamily buyers of jobs, all from Texas over to Florida, that traditionally bought from 2 or 3 steps, found our platform, and it was a lot of trucks of lumber OSB going directly to job sites over the next month and a half. And a couple of them were really happy what we saved them on money. So it's strange. It came in from people I didn't think it would ever come from, that we've been working with for 6 months, and finally they stepped up and started buying some stuff. And the other interesting thing, Matt, is a lot of these sellers, whether that's big distributors or mills that last year said they will never be on our platform, are now calling asking if they can be on it because they were looking for more liquidity, which I'm happy to have them on. I just thought that was an interesting trend that just started happening in the last 30 days.
Yeah, that's good. Get some traction.
Yeah. So we've got some OSB mills on now. We've got some more lumber mills on now, some more big distributors, and they're happy to be on and supporting the platform. And so it's going really well right now, and we know that success can be fleeting, so we're not taking it with a grain of salt. We're making sure we step on the gas and help make sure things are working correctly.
Good. You guys give it a shot. It's not gonna. It doesn't hurt to look.
Nope. Appreciate it, Matt. Well, everybody, thank you for showing up. Have a great week, and we'll look forward to talking next week.
Have a good day. See you guys.